Hello, everybody, and welcome to the Canadian Money Talk. So, regarding the Trump tariffs, Canada was notified by the US that China, Mexico, and Canada will be subject to tariffs. Canada will get 25% across the board tariffs, with the exception of energy, which will be at 10% because the US is importing a lot of it. Starting Tuesday, February the 4th, and would likely be in place until the fentanyl overdose issue is sorted. That's my thinking. And today, February 1st, Prime Minister Justin Trudeau announced the Canadian response at 9 p.m. Eastern. And the response is that Canada will slap 25% tariffs on 155 billion of US products, and also include non-tariff items like limits on rare minerals. So that is the reality. Now, a little bit of analysis. Given the relative strength of the US and relative weakness of many other countries, both cyclically and structurally, the approach promises gains for the US in the short term, both on trade, stock markets, and the US dollar, to answer the question. The key question is whether these gains materialize immediately or only after other countries attempt to resist and fail. The US dollar would also gain strength versus the Canadian dollar because Canada's central bank is lowering interest rates and the US Fed is holding steady. Now, the longer term outlook would be less favorable for the US if the tariffs continue and become a repeated game. The more there's tariffs, the stronger the incentive for other countries to reduce their economic and financial dependence on the US and accelerate the fragmentation of an international economic order that has historically served the US well. At that point, the US dollar would begin to suffer. So the weaponization of trade promises immediate gains for the US. But if sustained over time, it risks eroding America's central position in the global economy while encouraging other countries to look for alternative systems that bypass the US.